And you're complimenting the market.
What I can to help.
That is lovely. But let's see how it pans out through the course of the day. We'll start with the top headlines. Nifty remains decisively over 14,000 on hope of vaccination starting soon. Mid-caps lead the charge. Financial sulk. Trading volumes remain thin.
Even as India's expert committee reviews 3 vaccines today, WHO has cleared Pfizer's vaccine for use, and Dr. Reddy's tells CNBC TV18 that the Sputnik vaccine should be available for launch by late March or early April.
Veteran investor Ramdev Agrawal tells CNBC TV18 that while a third of smaller enterprises may find it difficult to recover from COVID, their bigger peers will likely grow bigger. So earnings for listed companies will likely grow even if the economy falters.
Petroleum Secretary tells CNBC TV18 that increasing the use of biofuels will be his ministry's most important initiative for 2021. The government will aim to meet the 2030 targets for ethanol blend in petrol and diesel ahead of time. The other focus will be to expand gas networks.
Auto sales for month of December start on strong note. Maruti and Escorts report double-digit growth in sales. Management commentary is positive.
2021-22 may see upgrades to India's GDP, say economists, but inflation too could come in higher than estimates. RBI's key challenges could be rolling back surplus liquidity and higher asset inflation, leading to instabilities in the story to follow. But let's get started with your stocks. Mayuresh Joshi, head of equity research at William O'Neill, and Rahul Sharma, head of research and development at Equity99 Advisors, join in. So that means it must be Friday, right? Okay, gentlemen, good afternoon to both of you. Mr. Mayank Rai is on the line with us from Mumbai. Hi, Mr. Rai. Good afternoon. How can we help you?
Hey, thank you. Thanks for having me. I have a quick question about Tata Chemicals. I had invested in this one like a couple of months ago, then I sold it, but I bought it again around 265 stocks, and I want to invest more. Reading about Tesla, etc., and the batteries, etc. I wanted your opinion on how the stock will do. Is it worth investing more, which I'm ready to in a 6 to 1 year or 2 year period? Thank you.
Okay, Mr. Rai, I'm going to ask Mayuresh to answer this. Mayuresh, first to you, Tata Chemicals, should he be buying more? What should be the advice for him?
Afternoon, Sumer. Afternoon, Sonal. So first of all, wishing both of you a happy new year, the entire team at CNBC TV18 and all the viewers as well. So hope 2021 is a safe, healthy and a prosperous year for all of us. Coming specifically to Mr. Rai's query on Tata Chemicals, the previous quarter had a few one-offs as far as the EBITDA were concerned. There were some inventory-related, flooding-related issues on the India operations. And the core part of their business, which is soda ash, is largely dependent in terms of the end-user industries. So flat and the container class used by realty and auto companies as well. You probably saw some amount of twitchiness as far as the lockdown pressures were concerned, both locally as well as globally. But now I think a few things are changing for the better. The imposition of the anti-dumping duty should push up soda ash prices as far as the Indian operations are concerned. The management in their con call have clearly pointed out that their North American operations demand has started picking up, and the next 2 to 3 quarters you should see significant traction coming both from the LATAM as well as the Southeast Asian markets as well. UK operations focuses more in terms of sodium bicarb because that is a more margin accretive business, and even the African volume should start picking up steam in the next few quarters as well. Rallis, the nutritional business and the specialty chemical business, where the additional cash flows are getting deployed, I think EBIT margin performance should start improving as well. Not too much of debt on the books, debt equity at 0.3 times, dividend yield is around 3.5%. So it's a stable business as per our own O'Neill ratings. Earnings, EPS ratings is a little bit on the lower side, but should start seeing improvement with all these factors at play. So yeah, clearly hold on to the stock. Once the numbers are out and once the commentary is coming through based on the numbers that come through, and if the stock exceeds expectations, you probably can add more at that point.
Okay. And Rahul, what is your recommendation? The stock has done well since the time of demerger. For the year, of course, it's down because of that demerger. What should the caller do?
Yeah, first of all, a very happy and prosperous New Year to CNBC TV18 team, as well as all of the viewers from Equity99 and from my family. See, for Tata Chemical, Mr. Mayank, this company is backed up with very good fundamentals, and very recently promoters, the Tata Sons, have bought huge stake from the market itself, which shows confidence in the stock. And technically also the stock is looking good on charts. All momentum oscillators showing good strength here. And if you get opportunity to buy on declines near the levels of 440, then add more at these levels and hold the stock for the target price of rupees 600 in 1 year. Over to you, Sonal.
Okay. All right, Rahul, thank you so much for that. Let's move on to our next viewer. Mr. PC Achaya writes to us from Bengaluru. He holds 100 shares of M&M at 772 rupees since 2 years, and he wants to know the outlook for the stock. Mayush, let me come across to you. Right now, Mr. Achaya is sitting on some losses. M&M has been in news for quite some time now because of SsangYong and other JVs that they have entered into and called off. What do you think Mr. Achaya should do?
Well, absolutely, Sonal, and I think the stock has been in the news for a lot of developments happening on a lot of these fronts, including SsangYong. So what has probably given an impetus in terms of the forward numbers for M&M? Obviously, the farm equipment segment, which is tractors and the allied segments as well, that should hold up for M&M. So the numbers that Escorts reported in the morning today, I think M&M should also have a very, very strong traction in terms of the domestic tractor growth, and therefore the farm equipment business should hold out. Now, when it comes specifically to the PV side of the business, obviously the first 2 quarters there were a lot of issues at play. But again, I think when you're probably looking at the new launches that they're doing, look at the kind of response that they probably got to the new Thar. And based on all these factors, I think the autos or the PV side of their business should start picking up steam slowly and steadily. Input costs for automakers have definitely gone higher. So I think the hint that they have given where price increases will happen 3rd quarter onwards, what sort of an impact does that have on demand is to be seen. But largely, again, I think the demand should come back slowly and steadily. When it comes to their investments, as pointed out in the beginning as well, I think the debt reduction plan in some of the international subsidiaries and the efficiency in operations is something that they are striving for. So it's a qualitative franchise at the end of the day. So I think the investor is better off holding such qualitative franchises if he has a long-term view in the markets.
Okay, let's keep it with the auto pack. Dilip Kumar has written in from Bengaluru. He has 105 shares of TVS Motors, which he has bought at 557 and now wants to know what he should do with this. Rahul, TVS Motor, you recommend that he remain invested?
See, Sumera, auto sector is looking good for long term, especially companies working in two-wheeler segment are looking good, and rural demand is also increasing, which is very beneficial for this stock or the company. So my advice for Mr. Dilip will be to hold the stock, and if we see any decline in the stock, then please accumulate more near 450 levels for the target price of rupees 550. Which should come in 4 to 5 months, then he may take exit from the stock.
Okay, all right, Rahul, thank you so much for your recommendation, but it's time to take a break now. We'll answer more. Welcome back here, tune into Your Stocks on CNBC TV18. Well, going to our next caller, T. Nanda Kishore Reddy is calling us from Andhra Pradesh with a query. Mr. Reddy, over to you, sir. What's your query?
Yeah.
Hi, Mr. Reddy, can you hear us? Can you hear us, sir? Okay, all right. I think we are not able to hear him, but he has investments in IRCTC. He holds around 219 shares at 1,629 rupees. He wants an advice on the future performance of the stock. Mayuresh, let me come across to you. What do you think Mr. Reddy should do at these levels?
No, you should clearly hold on. I think 2-3 factors clearly in favor of IRCTC, Sonal. First of all, I think the monopolistic nature of the business that they are carrying on. Ticketing is one of the prime reasons in terms of both contributors to the top line with a good enough EBIT margins that they post on this kind of the business, and that is expected to continue. Now, the developments that we are hearing in terms of more private operators expected to come bids and auctions probably laid out in the next few quarters and months. That should lay further impetus in terms of improved quality of rail travel. Second, upgradation of stations and the facilities thereof will also have a huge amount of impact in terms of the inflows towards rail travel as well. The second aspects of their business, obviously, when it comes to rail, near or their domestic travel business with the EBIT margins that they post. My own sense is that this year, a washout year for IRCTC, I think largely factored into the price. In the coming year itself, the normalcy in terms of EBITDA margins coming back between that 32 to 35 odd percent, ROEs clawing back above that 40-45% mark, ROCEs clawing back above that 50% mark, and dividend yield coming back to 1.25-1.5% because of the strong cash flows is a strong possibility. So I think a hold would be a call on IRCTC. I think stable business and monopolistic business that the company has.
Okay, all right, Mayuresh. Thank you for that. But let's go across to our next writer. Mrs. Kalyani Garg writes to us from Pune. She wants recommendation on technology stocks to invest in 2021. She holds 2,000 shares of L&T Tech Services at 1,700 rupees. Rahul, let me come across to you. Technology space, that has done really well in 2020. She's already holding some stocks in that space. You advise her to invest into more stocks. What do you expect in 2021?
Sonal, you have said it very rightly that the technology segment has done really good in 2020. And from Ms. Garg, ma'am, L&T Technology Services is a very fantastic company with strong fundamentals. Company in terms of business is doing really good. The sector itself is doing good, and the company is maintaining good dividend payout. And technically, also, it looks very much attractive and strong over here. So my advice would be to hold on to this stock only with the trailing stop loss of rupees 2,000, and the target price you should look out for will be rupees 3,000 in coming 12 to 18 months. Over to you, Sonal.
Okay, Ashok Leyland, auto sales coming through for December looking good. On an overall basis, it's a 14% year-on-year rise this month to about 12,760 odd. But if you look at just the domestic category, so trucks have done well, buses not so much. And it's a 56% rise for MHCV trucks. Buses, the sales are down 90%. But overall, which includes domestic plus exports, you can see a 58% up move in the MHCV truck segment. So Ashok Leyland, the stock there continuing to do well. Okay, back to answering queries. Mr. Mahesh Wadhwa has written in from Mumbai. He has 500 shares of Bajaj Steels, which he has bought at 292, and now wants to know the fundamental and the technical outlook. Mayuresh, you track the stock?
No, don't do this one. But so as we discussed last week when Nigel was around, right? Steel company is expected to report a very, very robust set of numbers in the quarter gone by. The steel companies which have a backward integration operations, specifically when it comes to iron ore, because iron ore prices have gone through the roof in the last few weeks, I think they'll be better off in terms of cost optimization when it comes to the reported EBITDA and the reported EBITDA per ton. So the domestic volumes expected to hold up. They're expected to bounce back very, very sharply as well. Realizations expected to remain strong. EBITDA expected to, because of the leverage pass-through, expected to remain strong as well. So yeah, I think the ferrous companies are in a very, very strong space. Tata Steel, SAIL, in my opinion, should report a good set of numbers as far as Q3 is concerned.
Okay, and Rahul, what do you suggest? Is Bajaj Steel something that the investor should hold on to?
See, Sonal, actually, the Bajaj Steel do have a steel name, but the company is into textile machinery. And there is some news in the market that government is working on textile policy, which can give some benefit to the company. And the stock is having like a very small equity, and liquidity in the counter is also very low. So to give technical view here, it is very difficult. So I would also not suggest the same. And if Mr. Wadhwa wants to hold the stock, then he may hold the stock for a long-term basis only. But for short to medium-term view, it is not good for investment. Over to you, Sonal.
Okay. All right, Rahul. Thank you so much for that. And our next viewer, Sushmita Berman, is writing to us from Ghaziabad. She holds 3,000 shares of GIC Housing Finance at average price of 114 rupees since 10 years. She is definitely a long-term investor and wants to know whether to hold or sell. Mayuresh, your take on this one?
Sonal, I think 10 years awful amount of long time, and hats off to the investor, but I think the stock should also start showing compounding process in terms of the return ratios. However, I think when it probably comes to the numbers, right, I think numbers have shown some sense of improvement in the quarter gone by. So when you look at the gross margins, for example, I think that's around 2.91, and that's shown a significant improvement on a YOY basis. The GNPAs have gone up marginally. The net NPAs have remained flat. The cost to income ratios have actually come off. Therefore, I think when you look at the overall sector as a whole, what you're probably looking in terms of the real estate deals and the registrations for Bombay region as an example, because of the stamp duty cut, I think more and more demand can be expected to come through as it comes for housing finance loans as well. So I think the classification of individual housing, corporate borrowings as well, and what happens in terms of the GNPAs, there should be a definite sign of improvement going forward. Trading much below its book value, so I think there is definitely value here and expectations of earnings revival. So yeah, you can hold on with expectations that the next few quarters should be relatively better for this space and GIC in particular as well.
Rahul?
See, Sumera, the GIC housing is also one of those players which have got bright future. The housing sector is showing good demand, and house loans have been much cheaper now, which is a benefit for the company. So housing finance company have a good potential to perform well here. In my advice, he should hold the stock with a stop loss of rupees 105. And if the stock crosses the level of 135, then the stock has got really good potential to reach to the levels of 175 in the next 1 year. Over to you, Sumera.
All right, guys, thanks very much for advising our viewers on the first day of the year. Wish you a very, very happy new year ahead. With that, we'll wind down